Hi, and welcome to Sunday Night Charts, where we take a look at the charts to help you with the trading week ahead. I'm your host, Steve Van Meter, and let's get right into the methodology here because this is based on some actual spreadsheet data that I created, my own indicators to help me look for changes in trends. So we're going to, on the charts, you're going to see short term is a 9-day, intermediate term 21-day, long term 50-day, and the ultra long term is your 100-day. These what we're looking at would be more of your moving averages. On the screen, you'll see the 50-day will be in green, 100-day in blue, 200-day in tan. And you're going to see then in the PowerPoint part of this, price versus momentum. Price is the general direction prices are headed. Very easy usually to figure out, but momentum is more difficult. You're not going to find that in your trading platform, and momentum is a rate of change. So when momentum is shifting positive, it's usually a bullish indicator, and when momentum is slowing, it is usually a negative indicator. Momentum often, but not always, leads price on the long term. Now, what is technical analysis? It attempts to determine where buyers and sellers are at. Some people do think this is hocus pocus, but let me tell you, resistance is a level buyers can't break and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. It is actually exist in the market. So let's start with the S&P 500, and on the short term price is bearish, but momentum now shifting to bullish. The intermediate terms are still bearish, long terms kind of a mixed bag, bullish and bearish, and ultra long term also mixed. Let's take a look at the charts on the S&P 500. And we can see here the biggest level of support for me is still sitting right here at roughly 3130. It did find some support off of its 100-day moving averages. People love to buy or sell against moving averages. So you see it tried to break through the 50-day on Thursday. It didn't do that. It tried again on Friday and it failed there. So remember, when prices can't get through a moving average, it usually means they're going to come down and retest. So that would indicate to me that a potential retest of the 100-day moving average is coming unless the bulls can get the S&P over the 50-day moving average. But realistically, even if the S&P 500 came down and retested 3130, it can still be an overall bullish trend because sitting right there is your 200-day moving average. And if we zoom out, you can see the 200-day, that tan line has been a pretty decent area of support in an uptrend. So even if you're bullish on the equity market, a pull back down to 3130 in the 200-day moving average does not change your overall view. Let's take a look at the NASDAQ signals. Overall, the same as the S&P 500, but in the short term, they flipped to bullish. Intermediate term is bearish, and then both long-term and ultra-long-term are kind of a mixed bag there. Let's go over to the NASDAQ and see if we can find anything different between the S&P, and pretty much it did get through its 50-day moving average last week, but on Friday it closed below. It didn't reconfirm its 100-day, but again, I still think even on a bullish picture for the NASDAQ, there's nothing wrong with coming down and reconfirming support. The biggest level of support, in my view, on the NASDAQ is around 10,550. And right there is a 100-day moving average. And you can see the 100-day instead of the 200-day is a bigger level of support for the NASDAQ. So if it comes back down there, it confirms that it can still validate an uptrend in the equity market. Let's take a look at small caps with the Russell 2000. Now, what's important about small caps is they tend to lead the large caps. In the short term, we've got bearish signals, and in the intermediate term, we've got them. In the long term, just like we've seen with the S&P and NASDAQ, we've got some bullish and bearish signals there. Let's go look at the Russell 2000 chart because it actually bounced right off of its support level, which is what you want to see. And it climbed through and it closed above its 50-day moving average. Even though the signals are bearish from a charting perspective, this is starting to look pretty bullish. So those who are bullish on the NASDAQ, on the Russell, on small caps, want to see it get through here and get back up to all-time highs. Now, and it may do that. Over the longer term perspective, well, it's got a ways to go to get back up to those all-time highs, but at least if it can get back to the 6 months highs, that would be a big step. Remember, for the Russell 2000, the big level of support that goes back several years, we can zoom back out, is right here between 1350 and 1381. Nowhere near that right now. But for the small cap index, it really needs to get through, say, 1600 to have a shot at running up there. So at the moment, the indicators are not overly bullish on the short term and intermediate term, but the chart is definitely looking bullish going into Monday. How about the energy sector? Now, this is the reason why I put this data together. So again, I actually pay for a subscription to Morningstar's backend database so I can pull all sorts of live data from them. And what I wanted to do was build a tool that would identify trends as they happen. So the energy sector is perfect. It is completely bearish across the board. So what am I going to look for a trend change? Well, I'm going to want to see the short term start to switch to bullish, and then the intermediate term, because when the intermediate term flips, now you're at the beginning of a pretty strong move, and then later on the long term and ultra long term to validate that. So I'm very excited to see and share with you that we have a completely bullish picture on a security. And let's go look at the energy sector. And it's great because if we zoom out, not only are price and momentum bearish, it's below all of its moving average. So it's checking every box for something that I want to see on my radar. Now, one of the problems with the energy sector is it usually doesn't completely bottom until after a recession is over, because that's where energy demand comes back. But nevertheless, it's very interesting. We're seeing the energy sector head back down here to its March lows and potentially forming a double bottom, or could break through. There could be a very deep value play in the energy sector. Now, another way to look at this and how I'm looking as a potential bond replacement down the road, because right now the dividend yield on XLE is 7.42%. So the lower this goes, well, it all of a sudden has every mechanism to be a bond replacement. So I'm very interested in that, very excited to see how this plays out, and we'll of course be watching this every week, and I can share that how that plays out with you. All right, on to the financials. Nearly bearish picture across the board with momentum just about to turn bearish. Remember, financials move opposite Treasury bonds. Not perfectly, so I'm not saying they're inversely related, just generally. And the relationship is a move inversely. So when you see bearish picture across the board for financial stocks, you should be thinking bullish narrative should be showing up in Treasury bonds. Let's take a look at the chart on the XLF and see what we've got going on here. And this is interesting because we have a major level of support. If we zoom out to the weekly chart here between just roughly $23.25 and almost $24 a share, and this is where buyers are at. So this is again perfect view of technical analysis. There are people that want to buy the XLF between those price points. They've done it back here and they're doing it again. And if we zoom back in, we can see that sure enough, it got right into that zone or supply zone where buyers are at, and buyers stepped in. Now the question is, can the buyers turn the trend? You've got a declining 200-day moving average, which is acting as resistance. Overhead, you've got the 50-day moving average. And so this is not overly a bullish picture at all. I would look for the XLF to roll over and continue its downtrend, and almost all the signals say that's where it's headed. So pretty interesting there. Let's go on to the utility sector, and on price, bearish across the board. On momentum, only bearish on the long term. So this one's hard to really have any direction on. Let's take a look at industrials, mostly bearish. Got the short term, intermediate term. It's kind of starting to look almost like the S&P 500 and NASDAQ. And we have the kind of mixed bag on price and momentum. Let's go on to the large gold miners. Now, this is going to shock people because everybody's really bullish on gold and the gold miners. And look at that, bearish signals across the board on the miners. And let's go take a look at GDX here and see what's going on. Now, remember, everyone said this was a consolidation pattern. They're right. They also said this was a consolidation pattern going higher. And I said, no, I think it's a consolidation pattern heading lower because of the dollar. And we're definitely going to take a look at the dollar today. But look at the supply zone. If we zoom out, and we're going to have to go to the weeklies here, and you can see that this zone here is where there were previous buyers. Those buyers now turn into sellers. So this zone right here, as far as we can see at the moment, is a sell zone. The next buy zone isn't down here until, say, around $26 to $27 a share on GDX. There's a little bit of a zone right here around the $34 or $35 point, and then a level of support sitting at $30 a share. But overall, to me, the signals say that this is bearish. That's been my view. And I think that's pretty interesting. Let's take a look at the next one, which is emerging markets. So bearish on the short and intermediate term, and then kind of split across price and momentum on the long and ultra long term. And emerging markets, to me, is a sector I like to look at because it tells you what's going to eventually come in the U.S. equity market. Of course, we've got this shaded zone. What is that? That's Steve's line of doom. This is where, when you get into this zone, volatility starts to take off and bad things start to happen. So emerging markets in the short term is flashing a bearish signal. It's sitting under its 50-day moving average. It really needs to get back up to this $45 price share. If it continues to roll down, there's a small and pretty solid, small in terms of how narrow it is, a supply zone where buyers have been right at around the $41 range where the 200-day moving average is at. If it comes down here and holds this level, it can still keep the bullish narrative of EEM intact. If not, it goes down. But look for a test of the 100-day moving average on EEM at some point, unless the bulls can take that through the 50-day early next week. On to long-term Treasury bonds, being the self-appointed bond king. We can't go without looking at this. And yes, on price, it's absolutely bearish. And on momentum, it's kind of flip a coin between the different signals. You can see it's bearish, bullish, bearish, bullish. Now, you have to understand that personally, I am bullish on the bond market. And my research says be bullish on the bond market. But from a price perspective, it's not bullish at all. You can see it broke through this triangle pattern here, and sellers really came in strong. We'll look at the speculative positioning on Monday's show, but you could see that they were just selling. And then the next day, you say, well, it closed up. Don't worry. There was some aggressive selling coming into that overnight session, and then selling in the overnight session, and then selling right into the open on Friday. I mean, it's just hammered, because the signals are telling the market, you want to sell this, but that's not the right, that's still going to be the wrong move. If TLT can hold this level of support, which it has for the last a little over 6 months since March, well, that is very bullish for the picture. And when you look at the net speculative position, and we will on Monday, you're going to like, wow, that is, the charts don't always tell you everything. But to me, if TLT can hold here and move higher, which I anticipate it will, get through those moving averages. The big sign of resistance right now isn't just the 100-day moving average. It is right here at 166. Knock on the door, get through there, and then you break through 172, and you're off to the races in a big blow-off move to the bond market that I think is indeed coming. Wouldn't see it, again, don't see it on the signals, but sometimes you got to look at the macro view. High yield bonds, bearish on price. Momentum is nearly all bearish except the long term. And remember, high yield bonds tend to lead the equity market higher and lower. So in this case, high yield bonds are saying that bad things are coming to the equity market. There is a zone of, let me zoom in, of support here that goes back to March. We'll zoom in a little bit. And so even if high yield bonds drop a little bit, get into this $82 to $83 range, as long as they hold there, this still tells you there are buyers. But if it does not hold 82, well, the risk now is to the downside. And again, all the signals are saying that high yield bonds are rolling over. And that is, again, a bad signal for the equity market. Let's move on to gold futures. We've got short-term and intermediate term are bearish, and then kind of split across the board on the long and ultra-long term. Again, looks kind of like some of our equity data has. Let's go over to gold. and we can see buyers came in at the 100-day moving average. The big level of support, at least where I see that gold can come down to and still hold its bullish narrative, is 1800 to 1850 an ounce. So at some point I would suspect it'll come down there and retest that. And if it holds there, then that again keeps the bullish narrative for gold in place. But again, watch the dollar. Silver, the same picture, the same exact chart on silver. Now, many of you asked for silver, and I was like, why do you really want it? Because I already know that I already looked at my underlying data. It's the same. Now, I realize the two are not the same, but my data tells me the same signal, so I'm looking at them as one is the same as the other. Bounced off the 100-day moving average and is struggling here between this no man's zone between the 100 and 50-day moving average. Really needs to get some wind under its sails here, but the dollar to me is the big problem that gold and silver will have. Speaking of the dollar, we're going to move on to DXY. Short-term bullish, intermediate-term bullish, long-term starting to flip bullish, and ultra-long-term bearish. This is what you want to see in a trend change. This is exactly how you want to see it. You want to see the short-term flip and then stabilize, and then the intermediate terms flip and stabilize. Now, keep in mind, the short-term could bounce a little bit, but you want to see this start to hold here and then move all green across the board to validate that. Let's go down to the dollar. And you can see it's sitting in this supply zone. Now, I did move the lines around, so if you're wanting, technical analysis is something that you got to work at. And where you draw the lines the first time may not be the right way to do it, but I have adjusted this supply zone because very clearly this is where buyers have been purchasing the dollar, or there's demand for dollars returning. And now the dollar broke through the 50-day moving average, and everyone said, Steve, you called it. And I said, no. We're not done yet. I still think there's more consolidation in the dollar. I want to zoom out a little bit and take you back to this picture here back in 2018, because at one point it breaks through the 50-day moving average. Everyone gets bullish on it, and then it comes back down below, and then the second cross of that 50-day moving average. Now, I know it did close 1 day or 2 days in here, but it wasn't really a kind of a break as we're looking at now. Let's go back to the DXY. What does that tell me? Don't be surprised if this thing gets down to 93 again. Maybe if it gets in the high 92s. Do not be surprised by that, because what will happen if the dollar does, it'll give people that one last view that, hey, I need to go buy equities, I need to buy gold, everything's short term, and then what will happen is the 50-day will start to bottom out, the dollar will break through, and now you'll get a complete trend change. Let's close with Bitcoin. Now, just so you know, I do not have a stake in Bitcoin. I've never owned it. So I'm going to give you an impartial view based on the charts alone. Now, why don't I have price or momentum indicators? Because Morningstar doesn't have it, so I don't have it. So let's look at the charts, because this is a bullish view. And I understand that many people only want to see Bitcoin go up, and I'm going to tell you the major level of support for Bitcoin is right where it's 200-day moving average between, say, $9,000 and roughly $9,500. You actually want this thing to go back down and reconfirm that. Believe it or not, if Bitcoin goes down and reconfirms 9,000 and 9,500, it does tell you that all these people that were buying between May and June and July are legitimate buyers. That's what you want to find out. Are these people looking to soak up more supply, or have these people bid prices up a little bit in the short term and are turning into sellers? You really do want to know that, and you can see we're in this supply zone between, say, 10,500 and 11,000 where people have been selling. The question is, who are those people? Well, you'll find out if it comes down and holds support at 9,500 to, or 9,000 to 9,500, where 200-day moving is averages. You'll find out if these people here were legitimate buyers, or if these people were just trying to get the price up so they could sell for a small gain. All right, with that, we'll wrap up our show. Thanks for watching. The content of this video is provides education information only. It's not intended to provide investment or other advice. This material is not to be construed as a recommendation or solicitation by or selling security, financial product, instrument, or to participate in any particular trading strategy. This video was prepared by Steve Van Meter on personal capacity. Opinions expressed in this video that one do not reflect the view of Atlas Financial Advisors Inc. or Steve Van Meter Financial.